So it's been years now as America's built a growing phobia about China, and I don't want to get into whether the phobia about China is justified or not. That's not where I'm going. That fear of China selling US Treasuries is deemed to be of some significance and problematic and could cause a crisis and other nonsense like that. The reality is, if you went back into the period of the 1990s, in those days, you used to hear the same thing about Japan. In those days, of course, and people, don't really think about this very well in memory. But by the time you get to 1990, the Japanese stock market's worth about half the total stock market of the world in what was a form of a country bubble. And after that, Japan did badly for a long time. But at the time, Japan was buying up American real estate and buying up US Treasuries. And the notion was that they sold the US Treasuries. Boy, oh boy, wouldn't that cause a crisis in America, which of course never happened. But here's the point I want you to get. China in total owns the same amount of US Treasuries today as Japan does, which is 2% of the total. It is actually not nearly as big a holder of treasuries as the Eurozone is. It's actually a little bit less than Britain is. And we don't fear that. Why do we fear China? Because now we've got China phobia. If you think of these countries' sovereign debt, all of them, they're all held by somebody for some specific reason. And when they sell Treasury country X of duration Y, 10-year debt or 20-year debt or 90-day debt or whatever it is, they had a reason they'd owned it before, and they've either changed their reason or they've changed their preference to have something else be held to satisfy that reason. So the fact is, China or any other country might sell some US Treasuries to buy some treasuries of another country. Change of preference, no change of justification or reason for owning some kind of treasury. In so doing, they sell the one, buy the other gets money. What does the other do? Well, that sold its treasury, it does something with that money. And maybe it buys US Treasuries, maybe it doesn't. The real issue is, how do treasury rates fare compared to other countries' comparable rates? If in fact you saw countries' net selling in a big way, other than playing the musical chairs game of right now I'd rather own a little more of this country and a little less of that country and the money circulating, you would see a marked shift in the one country's rates relative to the other countries. That's the thing to look for, whether it's from China selling or not. But as a 2% holder of total US Treasuries, it is not really the threat that people think it is. Nor is Japan, nor is Britain, nor is any of the other countries singularly. If they, country X, decides to sell US Treasuries, do they sell all of it? Do they sell some of it? Who buys it? Where does the money flow as alternatives? But by itself, this is not something to be terribly fearful of. It's actually pretty hard in the totality of the world to get away from US Treasuries in total, because US Treasuries are such an important part of the total global treasury market, solving a need that private sector owners, governments, sovereigns, central banks have in various ways to own government securities. And so what I would say to you is that this is another fear that ties, as I mentioned before, into the bigger phobia fear that we have about China right now. It isn't very clear that the treasuries aren't accomplishing for China what China wants them to. And China owns treasuries of a lot of different countries. as do Americans, own treasuries of a lot of different countries. And I think this fear is one that is hugely overblown and at its worst can't do more than have a minor negative effect on US Treasury rates. Thank you for listening to me. I hope you found this useful, somewhat educational, and enjoyable. Hi, this is Ken Fisher. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.